Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben, and I am recording this on Friday morning, March the 20th. And I wanted to kind of get started this month with two things that have me a little concerned about the market here. And the first one is obviously the size of the dairy industry, and so we've been increasing cow numbers significantly, and we're at 9.58 million cows, which is much more than we've ever had, so a historic number of cows. And we're going to get the milk production report actually this afternoon, which is why I wanted to timestamp this as of this morning. And overall, the typical number would suggest that cow numbers are going to stay the same, and StoneX is saying, hey, we might actually add about 5,000 cows, so again, plus or minus a little bit. But nonetheless, this herd is going to be very large. And part of the reason that we're suspecting that is we look at the slaughter data, which we got the latest data yesterday. It was 58,300. That was a little bit more than we had a year ago, but remember that we've got 151,000 more cows. So you've always got to look at that as a percentage. And so it's up just a little bit from last year. Now I've got this line at 30% where I say that's where the herd is going to be stable, but I actually think that it could be as high as 32% because I think we've got just a few more heifers floating around the system than we had just a while ago. So anywhere in that zone there, I think cow numbers are going to pretty well hold steady. If you want to significantly lower cow numbers, we need to get call rates up here in the 35 to 40 rate. And if we're down here in this 25 rate, we're probably going to build cow numbers like what we did last year. But what this has resulted in is just a record amount of cheese. This is the cheese production for January. It's the highest January, and it's pretty much the highest cheese production we've ever had. The same with butter. This is the January butter, the highest January that we've ever had, and a record, except for a period during the pandemic, was just a little bit higher on butter production. But again, just extremely high butter and cheese production. Now, the second thing that has me a little bit concerned, and we're going to see kind of where this plays out, is exports, because I think they're starting to hit a little bit of a headwind. One of them is the Iran war, which is increasing freight costs. So if we increase freight costs by 10 cents a pound on cheese, that means our price at the port is going to have to drop by 10 cents. And StoneX is the one that actually pointed out that about 8 to 10% of the dairy products run through the Strait of Hormuz, and so that's going to put downward pressure. At the same time, the U.S. dollar has been strengthening. Now it's been under a little bit of pressure here in the last day or so, but whenever the U.S. dollar gets stronger, that means that our price of exports has to go down to get them exported. And so here's the U.S. dollar. Historically, we like 92%. That is where we can export just a huge amount of product. Anytime you're above, let's say 98%, it gets a little bit more difficult. So we did have this period back here in February where the US dollar was down and we could be exporting a little bit. But when we're up here at 99, 98, it's going to be really hard to be exporting some of this product and stay competitive. If we look at our exports, now this is the January data. It actually came down. Now again, this is a supportive number. We were exporting much more than we have historically, but hit a little bit of headwinds in January. And the reason I'm really concerned about this is a graph that I use to look at the rolling disappearance and production of cheese. So this is kind of like your rolling herd average. You add a month, you take off a month a year ago. And when I look at this, I see two different trends. So we were very flat here through the end of 2024, beginning of 2025, somewhere in here. And then this really took off. And the difference here is almost all exports. So the domestic demand has been pretty well flat. And if all of a sudden we start impacting exports, that is going to put kind of a hurt on the disappearance. And one of the problems is right now our rolling disappearance would suggest 9.52 million cows. We're going to be pushing 9.58, so that's a significant jump up. We look at the percentage of cheeses. Italian is the largest. That's been declining, but it jumped up this month a little bit. American, which includes cheddar, fell a little bit, and cheddar is only 28%, and so that came up just a little bit. But the thing to remember is that only 40-pound yellow cheddar blocks is used to calculate milk price. And even this cheddar at 28%, a large part of that is white cheddar. And almost none of the 40-pound blocks are exported. If we look at the export prices for January, we're 204 for all cheese. And that came down as a percentage of production from 9.3 down to 8.9. So again, that's that headwind I was talking about. Cheddar got exported at $1.89. And again, that was up just a little bit, but again, right around that 6% number. But in January, our cheese price on farm was $1.40. And so there was a significant advantage to exporting cheese, but yet the cheese exports came down a little bit. But the way to look at this is $1.89 is what the price was. It takes 20 to 30 cents to move it to the port. That says that our cheese price is going to be somewhere around $1.59 to $1.69 on the exports. So to me, that's a little bit of a higher limit as what we're going to see on cheese. And we're going to get the February export numbers on April 2nd. They got really delayed and the schedule got all messed up due to the government shutdown, but I think we're going to be back on schedule here in April. And here are butter exports per day. These came down. Again, very, very, very strong, so exporting a lot more than historically. And if we look at that as a percentage of production, there was a significant drop. Now, one of the big points here is that only AA 80% salted butter is used to calculate milk price, but what we're exporting is 82% unsalted butter. So even though we may have a really good export price, that's not going into the price to calculate milk, because only the AA butter gets to use in milk price calculation. So butter was exported at $2.25. Our January price was $1.43, so a significant difference there. This week we did have the global dairy trade. That's also kind of an index on what the exports are doing. We'd been down here for quite a while. We popped up for a few sessions, but then we kind of came down. Again, that's the headwind I was talking about. Whole milk powder was down 4%, and cheddar was basically flat. So our cheddar price on the global dairy trade was $2.24. On the spot market was $1.65. As I said, it takes about 30 cents to get it to the port, so it's $1.95. The difference here is $2.24 has freight included in it. The $1.65 doesn't. So again, those are not as different as you might think they are. Let's turn to your milk check. Overall prices came up about 74 cents. January, I think, is going to be the low for the year. And it's nice to see that we've come off of this, but fat and protein percentages have decreased. So our uniform price was $16.44, but our pay price was more like $18.66. Again, there's a 2-cent difference here. That's just rounding errors. Your $16.44 was kind of in line with what I'd call the Northeast. Minnesota, Wisconsin was the lowest at $15.52. Florida was the highest at $20.65. So again, the Southeast has always got the highest milk prices. But when you're looking at only statistical uniform prices, they came up about 66 cents across the nation, weighted for the different amount of milk in each order. The changes across the country were very much dictated by depooling and class 1 down $1.65, which really hurt the Southeast. Yours came up 52 cents. Some of these out west came up significantly, but that was all of a depooling kind of issue there. So again, here's our statistical uniform price. If we kind of plot that out, we're still very much on the low side. We had this big run up in 22, 23, another run up here in 25. For order 33, if we look at the the different utilizations. Class 1 dropped, came down just 2.5 ticks or so. So we took class 4 out, which made sense because it was higher. We brought class 3 in a little bit, and class 1 utilization dropped, and that's as a result of everything's got to add to 100. Again, you'd take class 4 out because it's much, much higher than class 3. So here's our class 1 price. Came down $1.65 to $14.70. Of course, we're going to add that $3.80 to it for order 33, which gives us $18.50 for class 1. Let's look at the fat values. Percentage came down just a little bit to 447, and the price actually increased up to $1.78. So here's our $1.78, up 33 cents. The low was back here in January at $1.45. Of course, we were much, much higher last summer at $2.84. This is going to be dictated strictly by butter prices, and so this is suggesting it's going to hold around 2. But the big question is what's going to happen with butter. So it's down to $1.80 right now in April. There's a lot of pressure on butter. And there are some that's thinking butter is going to go up to $2. I'm going to kind of hold a question on that, because if we continue to build cow numbers, continue to build percent fat, I think it's going to be a tough time to hold a $2 number on butter. Your fat percentage came up 4 ticks from a year ago, but it actually came down a little bit. This is the time of year that the fat percentage starts dropping a little bit. And if we look across the nation, your 447 was pretty much on the high side. Now the Northeast actually beat you at 456, and Florida was very strong at 4%. But overall, across the nation, fat came down about 3 ticks. Turn to protein, both percentage and price were down. So here's our price down at 24 cents to $1.94. This suggests that it's going to come up fairly significantly, but not as high as what we had back here in November at 301. Part of that is on cheese price. There's some that are thinking cheese is going to hop up here to $1.80. But again, if I'm right and we're going to shut exports off here like at $1.65, I'm going to call that into question. So the question is, why has the spot cheese price been on this very much upward trend here? We're back into this upper channel. The real issue is this pop up here, this one here, and these last 7 here have all been driven by one company. And part of what I think is going on, if we look at the difference between spot and let's say July, you can afford to put cheese in cold storage if you've got a 12-cent difference. It takes about 6 cents to put it in, 6 cents to pull it out. So at $1.64, you can go out and sell that future at $1.79 for a hedge, and that'll be pretty well guaranteed a profit if you pull that cheese out in July. Even if prices have dropped, you've got that hedge to protect it. So my question is, kind of what's going on here. I think this cheese is probably going into cold storage. And the question is this going to fall back in here once this one company, stops buying? And again, we're going to see what happens on the spot market here in the next week. Protein percent came up from a year ago, but it came down this month. Again, we're starting to come on to the time of year when we're dropping protein percentages, but we're 344 across the country. Fairly good level, but Texas beat us at 351, and even the Northwest is very strong at 350. Finally, other solids, that doesn't change in percentages, but the price came down a little bit from last month. And if we look at this, it came down just a penny, but this is starting to trickle down, and the reason is that this is controlled by the price of whey, and whey has been under pressure on the market. But this should hold up, I think, in the high 30s, low 40s, given the protein demand that we've got right now in the country. So those 3 together give us class 3. That came up 35 cents to $14.94. Our low was January. As I said, I thought the January would be the low price off of that high that we had at $18.82. These look like they're coming up significantly. I kind of look at this and say, I think there's kind of some sort of resistance in here around 17. I believe the 16.15. I've got a little bit of a question on April as we're going to hit 17. And are we going to actually hit 18 out here midsummer? because part of what is going on, if we look back 6 months, to September, we were all sitting around saying, hey, February is going to be 17.45. That dropped $2.65 to where it actually closed at 14.94. So just a significant fall off. But we had several periods, where this thing just tried coming up. And I think this is kind of where April is right now. We're having this rally. But again, it's going to settle in as to where the National Dairy Sales Report has the cheese price. Finally, PPD is kind of everything other than class 3. So it's the difference between this gross price and class 3 price. Largely what controls that is the price of class 4 as well as class 1. So right now, this is as of this morning, class 4 prices are significantly higher than the class 3. And so we should have positive PPDs here for quite a while. Now that class 4 price is being driven largely by non-fat dry milk. As again, last month we talked about why non-fat dry milk is short in the supply side. A lot of these companies have decided they want to use skim as opposed to a non-fat dry milk. But if we look at this spot market, this has just gone ballistic relative to the international market. Again, we're continuing to come up here. So the question is, how long is this going to hold and how high can this actually hold? And again, I think time is going to tell that. Now turn to grains. These have had some upward pressure to it. Corn this last week has come up about $4.50 a ton. Soybean meal has come up about $5. We're pushing that $2 number that I kind of use as an index for the PE index. So we're, grain prices are starting to get a little bit on the high side here. What I decided I would do is plot out this relationship between soybean meal and bean oil, because this is very interesting. For a long time, soybean meal has been very high compared to bean oil, but with this increased oil price and the premium of the war in Iran, this has gone up significantly. And so whenever you get bean oil higher than soybean meal, that's going to put downward pressure on the meal because they're going to start crushing for the oil, and then soybean meal will become the stepchild. It's going to be interesting to see what happens with this bean meal as we move forward here. Now, cattle, gained another 4 cents on feeders. There's a little bit of pressure on them. Live cattle came down. And part of all of this is the low sulfur diesel, the fuel cost. We were trading July, somewhere around $2.30 down to $2. We're now at $3.43. So this has gone up significantly. This is going to significantly impact the profitability of crop farms and the ability to move product offshore because freight costs have gone up with this. And then finally, just whether we're building this historic ridge out here in the southwest. It's historic from both the size of it and the actual pressure levels. That's going to just force all the moisture around the top of it, so it's going to be very dry out here for the next week or two. And if we look at the drought monitor that just came out on the 12th, there is this area in Order 33 that does have a significant drought, again from northwest Ohio and through the middle of Indiana there. But across the country, it's the southern Texas and Florida that is kind of screaming bright red at this point. All right, that's what I have this week for you, Ben, so back to you.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.